showed a surprise drop in stockpiles. Right now, NYMEX light sweet crude is just below that, $95.57. And Brent crude, we just saw Brent hitting an all-time high about 15 minutes ago, 91.71 to be exact, just off those highs right now, 91.48, as you can see here. As for gold, well, prices there hit a 28-year high following that U.S. rate cut, and also after the dollar tumbled to record lows against major currencies. Spot gold right now is nearing 800, $796.20 for an ounce. That's your global overview. Now let's drill down to where the market action is with our global stock watch.
Yes, and we assemble our team from right around the world. Let's find out who's joining us today. We have in Frankfurt Patricia. Sejal joins us in Singapore. Of course, we have Becky at the London Stock Exchange. But first, kicking off with those numbers out of Credit Suisse, here's Dan Scott in Zurich.
Good morning to you, Ross. Well, Credit Suisse certainly a focus for us here in Zurich after they come forward with their third quarter trading statements. And as one of the last banks to come forward with an update on how the third quarter was, you would have thought that the market would have been well prepared. But Credit Suisse shares, in fact, trading close to 2% lower now as the write-downs of $2.2 billion are higher than some market participants had been expecting. Also, investment banking had to take a pretty severe hit. A loss in their proprietary trading business led to net profit sinking down to 6 million Swiss francs from investment banking, and that also coming as a bit of a negative surprise. To the upside, has to be said, the Credit Suisse at least says they're starting to see some encouraging signs out of the credit market activities of theirs, so their outlook is a little bit stronger than some of the other banks have given us up and to date. Credit Suisse shares, though, down in line with the declines that you see with the rest of the banking stocks, because UBS, which had a clearly negative set of results out on their third quarter, is down over 2%, so worse than Credit Suisse. What's helping push UBS shares down is that Merrill Lynch has downgraded them to a neutral from a buy. So that's a roundup here in Switzerland. I'm going to hand you over to Becky, who's going to give us a roundup things happening on the FTSE.
Thanks for that, Dan. Well, we are seeing the FTSE actually trading a little bit lower at this stage. It's been bouncing around a bit as the morning has gone on. But right now we see the FTSE just trading a little bit lower, about 40 points, in fact, to the downside. Now, lots of big earnings stories out today, moving these stocks in both directions. Let's start with Unilever. Unilever actually the biggest percentage gainer on the FTSE right now. It's up by about 4.7% at this hour. Third quarter underlying sales came in at 4.5% higher. Now, that was right at the high end of analyst expectations, so that's certainly helping the stock, as we can see there. Also, this company has said that it's confident of achieving its 2007 target, so the outlook there also pretty positive too. We've had those increased commodity prices, which of course have really fed through into increased costs for this company, but it would seem that Unilever are managing to pass on most of those costs to the consumer, and also that they're doing quite well with their efficiency and restructuring, which is helping too. Let me mention though AstraZeneca, because this is one of the stocks which is amongst the biggest decliners here today. It comes out with earnings a bit later on. But first thing this morning, AstraZeneca came out with an announcement which has really hurt the stock, as we can see, down about 1.6%. They said that Cobalt Pharmaceuticals have said that they plan to make a generic version of Cresta. That's the cholesterol drug. Now, the AstraZeneca have said that they are currently evaluating this letter they've received from Cobalt Pharmaceuticals, rather, but it is definitely affecting the share price, and it really just highlights this whole theme in the pharmaceutical sector that generic drugs are really beginning to hurt some of these big global pharmaceutical companies. Patricia, let's go to you for now and find out what's happening in Frankfurt.
Well, what's happening is the second leg to the downside. I have to say, we did not manage to keep the 8,000 level, so we saw one big step to the downside right at the beginning of the trading session. We bounced off the 8,000 mark, but now we're definitely failing to hold that, down 0.5%. Actually, losses are speeding up at the moment, 7,982. Of course, it is the financials following suit to what is happening on the Swiss market, with Credit Suisse down almost 2%. So we do have Deutsche Bank and also Deutsche Postbank on the downside, followed by Volkswagen and ThyssenKrupp. The only stock that really is standing out on a positive note is Deutsche Börse after their stunning set of third quarter results happening last night after the bell. We did have EBITDA up about 44%, sales up about 30%, and also net about 36% to the upside. Outlook for 2007 is very good as well. As for 2008 is supposed to become a record year. And interesting as well, not only sales are up due to volatility during the August and September months due to the credit crunch and the subprime crisis, but also the costs are under control for Deutsche Börse, and they will also keep operating costs under caps for 2008, lowering it from the level of 2007. That's a wrap up so far. Let's get over to Sejal. Good morning to you.
Good morning, Patricia. Well, the Asian markets ended up mixed despite that rate cut in the U.S., but the rate cut did help Japanese stocks, the Nikkei 225 and the broader topics closing firmly higher. The weaker yen also gave a boost to the blue chip exporters, Sony, Canon, and the auto stocks all in the green. As well, we got the oil or the energy-related plays that helped boost the index as well, with crude hovering at record highs. Nippon Oil was the big winner there. Over in Korea, the Kospi, we saw a volatile session there. The Kospi actually hitting a record high of 2085 early in the morning, but quickly giving up gains. And the concern there is the strengthening won, which is hovering around 10-year highs against the U.S. dollar. That put pressure on the exporters. Looking at the greater China markets, the Hang Seng and the H share continued to track gains, really getting a boost from the mainland oil plays, of course, in the back of the higher crude prices, but also because China unexpectedly raised its domestic gasoline and diesel prices by a tenth, so that gave a lift there. I do want to mention Lenovo Group as well, because that stock closed down 2% lower. We got the earnings numbers out just about a half an hour ago. The PC maker nearly tripled its Q2 earnings, coming in at $105 million US dollars, handily beating the expectation of $72 million. On that note, I'll pass it back to you, Brian, in the U.S.
Thank you, Sejal. Now, there's a tremendous amount of economic data from the U.S. today, so get out your pen and notepad if you want to keep up with all of it. The personal income and spending figures for September will be out at 8:30 a.m. New York time. Both income and spending forecast to rise by 0.4%. Also part of this report is the monthly PCE, which is a key inflation indicator. Both the PCE and core PCE are seen rising by 0.2%. Weekly jobless claims will be released at 8:30 a.m. New York time. They're forecast to fall by 1,000 to a total of 330,000. And at 10 a.m., the October ISM is out. Analysts look for a reading of 51.6. That's versus 52 in September. But any number above 50 denotes manufacturing growth. Also at 10 a.m. New York time, the National Association of Realtors puts out its monthly pending home sales data, so that'll be important to see in terms of the housing market. ExxonMobil reports third quarter results before the opening bell. Now, despite a squeeze on refining margins, analysts do think it may be one of the few oil majors to report higher production. Some other companies reporting today include Sprint Nextel, Marathon Oil, CBS, NYMEX Holdings, and Eastman Kodak. And that, of course, is your global stock watch, which you can find only on Worldwide Exchange. Now, coming up for us today, the Fed, of course, cutting rates, and some are already celebrating this. Now, is it onward and upward for equity markets? We look at the global picture and discuss strategy plays right after this short break.
Worldwide Exchange in association with Credit Suisse.
Some think startup. We think IPO. Some think competition. We think partnership. Some think successful business. We think wealth protection. Whatever your vision, we at Credit Suisse seek new perspectives to make it a reality.
Everything I've wanted, all that I've asked of you, everything I've dreamed of is all coming true. So stay. As we walk hand in hand.
Tonight, $300 oil? Don't panic, you'll be prepared for the worst case scenario with our action plan. Squawk Box, where business turns first. Tonight at 7:30 on CNBC. Game on! As the video game business wraps up for the holidays, we'll show you the winners, losers, and how to take your profit to the next level. Power Lunch tonight at 12 on CNBC.
Your CNBC mobile experience is now complete with a dedicated website designed for your mobile at asia.cnbc.com. CNBC Prime and SMS alerts keeping you up to date with the latest financial information, complementing our 24-hour live channel streaming and video on demand. Keep your competitive edge with CNBC Mobile. Access CNBC anytime, anywhere. Brought to you in association with the following operators.
Worldwide Exchange in association with Credit Suisse.
The Fed did what it should have done, and that it sets us up for, I think it sets us up for a big surge here.
Well-known hedge fund manager and former Morgan Stanley chief global strategist Barton Biggs sounding a bullish horn on CNBC's Fast Money on Wednesday night. The question is he right? Well, joining us now to discuss, Tim Harris, head of market strategy at JP Morgan Private Bank in London, and in Singapore we're joined by Niku Harachi, managing director at N1 Asset Management. Tim, I'll start with you. Very simple question. Are we ready for a prolonged rally here?
I don't think it's going to start just yet, Brian. When the Fed cuts, it's normally good news for markets. It normally takes a 12-month lead for that really to kick in, and that's coincident with better economic conditions. I think we're going to have bumps and bruises over the next quarter. I think the housing drawdown, the impact on consumer behaviour, the impact of corporate profits as they work forward. We haven't really seen significant drawdowns in 2008 forecasts yet, despite the Q3 results season. We've got to work through all of those. Easy monetary policy is good news, but I'm not straining at the leash to buy the US at this stage.
Well, Niku, who's actually in Hong Kong and not in Singapore, sorry for that. What's your take here? Are we looking pretty bullish for the long term here after this move by the Fed?
Well, it's always a good question, and I would like to, after the 25 basis points cut yesterday, obviously the market in the morning took it as good news. But I think we are keep being asked, what about the valuations? We're seeing very, very high valuations in the Asian markets, but from a fundamental point of view, we think we are much better case than we had in the early 90s. Simply because in the early 90s, we were seeing the Fed increasing rates from 3% to 6%. So we are seeing a lot of those cheap money coming into Asia, going back to the US, which at that time were increasing growth rates. Today, we are seeing increased cash reserves in entire Asia. We are seeing external debt ratio, which has declined from 33% to 19%. So from the fundamental point of view, we think it's a lot better.
Okay, but Niku, it's more here in Singapore. Let me ask you about the fact that could we be anywhere near a bubble? Because on the one hand, you've got the Fed cutting interest rates, right? You've got liquidity still very rampant in Asia. You've also got oil prices at all-time highs nearing $100 a barrel. You have got gold prices near $800 as well. And you've got some of these Asian markets at or near record highs. How do you play the markets right now?
Well, I agree with you, and it's certainly also not that we would overweight the Asian stock markets at current levels. We remain, as I said, bullish on fundamentals, but just like we look at the Hong Kong stock market, the magnitude of growth, returns, and liquidity is not justified at the current rate. We are seeing the market being a valuation of the highest in 22 years. We've only at 4 other occasions seen such a high valuations, and in the coming year after such valuations, we've seen the market falling 30%. So from a technical point of view, and even in the next 12 months, we would not overweigh the markets.
I think there's an interesting point there, Niku, but when there's Tim Harris here in London. We're looking at convergence of valuations globally, and that includes emerging markets coming to US levels, coming to European levels. 14 to 16 times is typical. And obviously the risk premium that we're seeing in Asian equities is much lower because lower risk-free rate and higher risk-free rates are being seen in that part of the world. But you've got better growth there in Asia. Do you think if we look ahead over the next year or two that there's still the opportunity for above average returns at a time when the US economy could be moribund?
Well, it always, I think it depends on the sectors. And when we are seeing so many stocks trading at such high PEs, I think it's hard to say that if the slowdown in US is going to take effect, what's going to happen in Asia. So we would only be bullish and thinking of great returns in very specific sectors, such as the banking sector, especially Chinese banks. Even though they're trading very high ratios, we think they have so much cash reserves and they're so aggressive in the global acquirements that we think this is a good play.
Really, Tim, you would be avoiding banks in the US or Asia. Again, you know, Credit Suisse is sort of the investment banking sector, barely making a profit.
Yeah.
Would you be, in terms of sectors, avoiding banks and still playing the techs? I mean, the Nasdaq up 5% last month, and there seems to be a big momentum in those earnings.
Banks will be back next year, Ross. They invent ways of losing money and they have very deep pockets, deep balance sheets. They will be back. I think some of the mortgage banks are under pressure, more so than some of the investment banks, because I think the investment banks are going through this period of catharsis right now. But in the short term, I don't think banks have yet found the bottom. I don't think the bad news is out of the way. The tech boom is, not the tech boom, the tech rally is interesting, because I think what underlies that is a capex cycle which is coming through quite strongly on a global basis. And tech is a services sector, so it tends to be quite currency neutral. You can sell tech services locally, certainly in software. We're quite bullish of the capex recovery, which is happening globally. We're quite bullish of the capex infrastructure story that we're seeing in newer markets. And I think tech is going to be an interesting way to play that. Valuations are quite high, but I think the growth story that's embedded in tech has stronger basis than some of the more cyclical sectors.
And Nick, who Tim talked about there, tech is, you know, kind of in a way currency neutral. I just wonder, actually, looking at currencies, when you continue to see dollar weakness and you see some currencies there pegged to the dollar, what does it mean for investing in countries in Asia where there is no dollar peg and they're seeing a sharp appreciation in terms of and diminishing competitiveness?
Well, we think in terms where the money is not pegged, as in Hong Kong, for example, in China, we are seeing, of course, this is a good thing for the Chinese economy. And we are also seeing the Chinese government coming out saying that they would like to see the RMB appreciate towards the dollar. And it has also, since June, appreciated 1.5%, but actually depreciated more than 5% towards Europe, or the euro. So we think that the Chinese government is coming out saying that they would like to see appreciation in the currency, but they haven't really played the most powerful tool, which will be the exchange rates. So we think that China will continue profiting from not being pegged to the dollar.
Brian Shackman here in the U.S. Tim, I'll take this one to you to start. We talked about tech, you talked about financials. In this current market conditions, what other sectors are really piquing your interest right now?
When I look at the world, Brian, I see it uniquely. The US is underperforming the world, and the rest of the world economy still has a very strong momentum. And that's manifesting itself in commodity pricing. Obviously, we're seeing both softs and particularly in minerals and metals, and we're seeing the weak dollar underpinning that as well. And that's a sector which I think still has momentum, because I think when I look at the delta in demand for industrial products, industrial production, and ultimately in GDP, it's coming from the East, not from the West. It's not coming from G7 economies so much as the new economies. And I think when I look at minerals and metals, that's a very, very geared way of looking at that. Another way of looking at that is the Baltic dry shipping rates. We've seen the shipping sector, transportation sector, performing marvellously over the last 2 years. But you can't find a ship for love nor money on the high oceans right now. If you want to order a new ship, shipbuilders are quoting you 3 to 4 years out of Korea and China.
I'm sorry to jump on you, Tim. I just want to get a quick response from Nico. Any of the sectors maybe that Tim touched on that briefly you didn't bring up that you want to mention?
Well, the sectors that right now, one country that we are bullish is South Korea. We think that the GDP growth outlook for 2008 looks even better than in 2007, backed on consumer strength and more exports. We also we think that the new government, which will be elected, is going to comfort consumer sentiment. And we are seeing a low interest rate environment, and we are seeing that they will lower interest rates on properties tightening. So we think that the property sector in South Korea could be a good sector for the next year.
All right, Nico Hirachi, thank you very much. A lot of insight. We wish we had more time for both of you. Nico Hirachi, Managing Director, N1 Asset Management, and Tim Harris, Head of Market Strategy at JP Morgan Private Bank.
Yeah, we're going to take a short break. Still to come, it's all changed for European securities markets as new trading rules have come in force today. MiFID, as it's called, is one of the biggest changes to hit the sector since the Big Bang of 1986. What will the day of MiFID mean?
Worldwide Exchange in association with Credit Suisse.